Today is Monday, May the 6th, and we started the morning by looking at what was happening in the pre-market with the S&P down over 45 points, and we were looking at several stocks that were having support on their daily clouds. So let's see how that finished today. We have the S&P, which at one point was down below 2,900, and as CNBC said, it came roaring back. However, it still is below the previous double top, or you can't really call it a double top because they're pretty close together. But these two highs, which proved to be, near resistance all last week, we managed to end over that level 3 times last week, but we're still below it this week. So it still represents a top here at 29.40. Last week we had it down a little bit lower. We had it at the at this level here, 29.31, which was the highest closing value. But now we've got it running at the highest daily value for the S&P. If we look at the 1-hour chart, let's look at the 1-hour chart. We had resistance at the end of the day, just at the top of the cloud. And I did tweet that the Woody's pivots were playing an important role in the market in the first hour and a half of trading. And if you look where we ended right off at the daily pivot point of the Woody's pivot, where we had rejection and pulled back into the cloud. So the Ichimoku span in the 1 hour remains below the candles. The price remains within the cloud. Let's see if we can break out tomorrow. We've still got this very thin flat cloud out there, which is not providing a lot of support. If we come down to test it, there's not much support for anything on the downside next week. Actually, several weeks down the road, right? It's probably sometime in June. So we'll go to our next stock, which would be Apple. And at the end of the day, I added 5 short weekly puts at 207.5. If the news can stay positive about China discussions, I think Apple will stay above 207.5 today or this week. Let's look at the daily. And we did come down and close that gap. So we said in the video this morning that we could possibly close the gap. I think that qualifies for closing the gap. Some people go wick to wick. I go highest of the opener close to the lowest of the opener close. And that would have been this value. But if you take the wick, it was a perfect gap closure. So take that off the map. Now we have another gap that we're going to draw with motive wave, which is up here, which represents the drop that we saw today. So that's the gap that needs to be closed on the upside, and we could see resistance, but then that would be at the previous high. We still have this gap way down here, and it's going to get filled sometime, just not anytime soon. The 50 moving average on the daily still continues bullish, and the 200 is starting to, well, it started inflecting up when you had this cross here of the 50 and the 200, and just continued to move in an upward slope. So Apple is still looking positive momentum. Caterpillar had that bounce on the pre-market just at the cloud, just as it did last week on April the 20th, the week before on April the 25th. Now we've had 2 days where we've had daily cloud support. So that cloud, 3 days, you'd include this one back here. So we have 1, 2, 3 days where we have daily cloud support. That is quite important. You might want to take your stock off if we lose the point where we had support 3 different times in the last 2 weeks. Caterpillar is still, well, it's fallen below this trend line at one point, but it did recover above the trend line, so it doesn't count. We're still on our way to our Gartley target of 149.52, which started in December, so it's taking a long time to get up there, but that is our target, that Gartley target. If you don't know what the Gartley is, just ask me in the comments below. Google continues to suffer. Although it did have a big rebound, it's still not recovering from this big earnings drop. This is, let's close this over here. This is Whirlpool. We were looking at that for our rebound for the housing market. If we really have a strong economy, as people are saying, there should be an improvement in the housing market. People should be investing in the houses that they currently own by doing renovations and buying new appliances. If if there's a real good economy, then people should be buying new homes, bigger homes, and appliances for those new homes. So we're looking at this trend line. We hit it last week basically, and we've pulled off. Today was not a good day for Whirlpool. So our trigger to buy still hasn't been touched. Let's take a look at Intel, which we haven't looked at in a few days. We're still waiting for this gap to fill. And today brought us closer to filling the gap, but it didn't happen. It will happen. Gaps, unfortunately, they do fill. Western Digital had a loss of the cloud at some point today. We opened up on the cloud and we finished above the cloud. So good day for WDC. I did buy back in. I got my stock pulled from me on Friday because I had the 50 short calls. So I made about 75 cents on the stock and about 85 cents on the calls. And I just did it again. Today I bought back the stock with the same 150 calls because I just see WDC having a tough time filling this gap, which is at 50.99. When it does get into the gap, and as its second day in the gap, then I'll feel more confident that it's going to move off of 50, and I'll be starting to sell 52.50 calls on my stock. They also declared a 50-cent dividend on Friday. So you've got lots of time to buy stock for the dividend. I think June sometime is going to be the last time you can buy it without the dividend. That's pretty much a summary. The cloud was very, very important today, and we should see the S&P continue to move up tomorrow if there isn't news overnight about the Chinese reacting poorly to what Donald Trump has been tweeting. That's what brought the market down today. At one point, they said they were reconsidering coming to DC for their planned trade talks.